Welcome back, traders. This is Sandra with Trading Made Simple. Today we're going to talk about different chart analysis tools that you could utilize, as well as some order flow, institutional information that you could use. And then when you have a watch list that you got from a friend or from Twitter or from the Discord that you belong to, like how are you going to use that to be able to profit? I mean, is it just when the trigger happens that you get in, and then do you hold on for dear life to wait to the first target hits, and then do you hold on for dear life for the second target, etc. And so what I wanted to do is just kind of give you an overview about some different information that's used while trading and how that can help you in your own toolbox, as well as how you mentally think about the type of trader you are, and then use it to your best advantage, right? So this is not a one size fit all. And so let me explain a little further. By the way, if you're liking this type of content, please like, subscribe, and share. I really do appreciate it. You guys are awesome. Okay, so what ends up happening is let's say we get the Trady Ticks, and we do actually. We get the Trady Ticks full line of channels in our Discord. It's excellent information. This is machine programmed and driven. So if there is a bot that shows a breakout or a breakdown of a chart as an example, it's not, a human being identifying that the wick has touched a certain area on a 15 or on a 5-minute chart, and then identifying their own basic rules and saying, when a wick touches a trigger area, I'm not going to act on it until the full body candle actually breaks through that, right? That's like my rule that I teach in our Discord, right? I want a good 5-minute candle that thrusts through an area that we're looking at and or a trigger that we've identified. And so if it's a machine that's just identifying when something is breached, then you're going to get the wick, right? You're going to get the wick. It touched it. So by the time, and depending on how long, and what the time frame is, you're going to go back to that chart. Hopefully you're going to go back to that chart. I guess that's why I'm here. I'm telling you should be going back to the chart. Don't just look at a bot from any service and say, oh, um, Goldman Sachs just bought $2 million worth of Apple and I'm jumping in right now. No, actually, because they have a bigger drawdown that they can draw from, and you and I don't. Like, if my drawdown's 30%, that's my risk level, and yours is 15. Well, they've made that trade, and they're willing to go 50%, so they don't care. Well, you and I care. So because of that, we need to look at the chart and then see based on how we're trading. If we're shorter term traders, like we don't know what the institutions are doing. We don't know how long they're willing to wait. Oh, sure, they pick a strike price, and they also pick an expiration date. But by the way, if you've traded a little while, you already recognize that big institutions, they do that because it's probably the best formulated trade to make based on the amount of money that they have and the amount of shares and or options that they want to get. But really, they may have a different target in mind and may exit that trade long before, way, way long before the actual trade date. So if you don't already know that, you're going to figure that stuff out. But in this segment, let's just talk about the difference between the machine learning tools and then a person that comes chart analysis. Now, why am I telling you this? Well, because in our Discord, we do have the full line of Trady Ticks channels that are awesome. Very good information to use while researching, as well as knowing where all the big institutions are going. Now, with that said, also great to have someone that can read a chart and then identify movements in that chart so that you could take advantage of either shorter or longer term trends and or positions. And so what ends up happening is it's nice then to have the best of both worlds. And so we just added some analysts that are going to be doing that. And so they're going to have some channels that they're assigned to, and then when they're going to create a weekly watch list with market analysis and give you some levels to take a look at. They're going to show you the charts. They're going to identify why they're looking at the chart, uh, what's the significance and importance of those levels, and then also give you, hey, this is what I would be looking at. If it passes this point, it could go to this point, and then, here's target number 1, 2, and 3, etc. And so the interesting thing, though, is that, even that alone, even though it sounds really cool, may not work for you. And the reason I say that is because, there's a lot of day traders out there that are trading on a 5-minute chart as an example. And so if that analysis, and you need to know this, especially when you're reading stuff on Twitter and anywhere else, I might add, if you are trading based on your style and trade plan. So if you're on a 5-minute chart, whatever you're reading, unless it's truly identified as an analysis on a 5-minute chart, you're not going to be able to take the appropriate action to give you the best probabilities for the way that you're trading. And so because everyone has their own drawdown level, you want to kind of know that. And so what's neat about having, I guess, a human now giving you some chart analysis, and you can see the charts and stuff, it's not just all machine driven. It's not just order flow. You're actually now like looking at charts, and now you can make the connections based on some prior research that you've done, maybe with order flow. The other way that it can help you as well is like, as today, as an example, one of the analysts was working on a longer period chart, and I just happened to be available, and I was trading. It was very exciting. I don't trade as often as I want to, and so what ends up happening is, I identify a level, and I immediately call it out in Discord that, hey, this thing is going to retrace, and it's starting right now. If you're a short-term trader, this is it. And so called out the level, we got in, called out the stop loss, and we ended up writing it for a nice 30, 40%. And then what ends up happening, though, which I thought was apropos for this video, is then literally like 30 minutes later, one of the analysts pipes in one of the channels and says, hey, we're retracing right now. Well, actually, we've been retracing, right? We've been retracing for 30 minutes. We just took advantage of a 30-minute move, a 30-minute ride as far as I'm concerned. And 30 minutes with 30% is great for me and for a lot of the traders that I work with in our room. However, of course, if you are a full-time worker, then you're just concentrated on our swing trades, and you're really not worried about the day-to-day activity. If we're creating weekly income trades and monthly income trades, then those are things that you don't have to worry about. But as a day trader or a short-term trader, you're looking for those instant movements. And so if you're in a room, if you're getting information off of Twitter, if you're getting information elsewhere, you should recognize what time frame the people that you're following are looking at, so that you too can take advantage of getting together, I guess, getting on the right side of already your trade plan by knowing, hey, what is my Discord room? What are they looking at? Are they looking at a 1-minute chart or a 5-minute chart? Am I more of a 1-hour type trader? Can you handle the 1-hour candle up and down, high and low? If that's true, what is your risk level? So these are just some of the questions that you would think to yourself, not only with the machine-driven information as these institutions are sending out, because they have a bigger drawdown limit than we do, right? So if they're getting into a trade and they're not looking at a shorter period chart, they're looking at a much longer period chart. And then you and I get excited because, oh, there's a $5 million order on something, and we jump into it. What ends up happening? Well, we lose our premium off of that call or put, because that move isn't going to happen for a while. But they're looking at a longer period chart, and we're looking at, maybe a 15-minute to an hour for a weekly day trade or a couple day trade. So just some food for thought. I got off on a tangent here, but I really just wanted to show you our watch list and then tell you how you can benefit when you look at a watch list. Ah, I got into a whole segment. How you can look at a watch list and say to yourself, okay, this is the watch list, and am I just supposed to like look at the break, the trigger break, and say, okay, Nvidia, when it hits 127.39, I'm like in calls. Well, no, I wouldn't read it that way, and I recognize that everybody has a similar watch list, and they're always like greater than. But you have to have some other rules in place. And like what we teach is like, hey, look, if you're trading on a 5-minute chart or a 2-minute chart or a 15-minute chart, and the candle starts breaking through that price trigger, you should make sure, and this is where the machines can't do it, you should make sure that, it's a full-bodied candle. It's not like a little baby wick that's just piercing the price and then going in the opposite direction. Who's that happen to? Hello, everybody. And this is like one of the pieces to the puzzle that you put it all together and everything starts making sense, right? And then when things start making sense, then you make better decisions based on confidence. And so if I'm trading a 5-minute chart and 127.39, the candle pierces it, I'm waiting, I'm not jumping in. I know I want to catch the whole move. Don't worry, I know, I do too. But I also don't want it to reverse and then take out, my 20% risk level for that trade or whatever it might be for you. So what you want to do is like if I would suggest, if you don't already have a rule in place, I would suggest waiting for the full body candle, the candle itself, to actually pierce through the price, not just a little wick. And then once it does and it's traveling to your target, think about those targets as exits. Because soon after a target is hit, the stock will pull back and then get ready to go to the next target. And if you don't like the risk associated with that pullback or a retracement, then you should look at that first target as boom. When it hits 130, I'm getting out. So let me show you how this works. So we're going to take NVIDIA. 127.39 is the trigger. I'm on a 5-minute. And so 127.29. So somewhere around here, 729. Oh. Okay, so right here. So 127.29, so you could see that, unfortunately, this candle right here is like more wick than body, right? However, depending, right, on the trend lines that you're using, the indicators, I have the wave here, I have the bullseye up here. It's helping me to identify that it's past a major trend line. We've passed a pivot low. So I feel confident that, okay, hey, someone else, as an example, if this is a watch list that I didn't create, someone else saw this 27.39 level as a major level. All right, so that's their analysis. But do we know if that is actually on a 5-minute or a 1 hour or a 15-minute? And look where that's at. So really then, what pierces through that 130, 127.39? Let me try to get it right exact so that 27. All right. So actually, you can see on a 5-minute the secondary candle. So that means on the 10 minutes after we opened, the candle automatically opens up just about at that level, just about. And when that 5-minute candle was actually happening, it was actually a wick. But it was breaking through that trend line, which gives you more confidence. And so once you see the body forming, you could have, because the candle pops in, it starts, it goes lower, and then it starts to improve. You could easily make your stop loss, right? You can make it at the previous candle low here. That's your easiest, right? You talk about a very minimal risk level. If your entries on this candle, just make it the one prior and just right below that and just say, hey, look, I got just that amount of leeway. So I know that this is a short period of 5 minutes. If that candle is too big for you on a 5 minute, change it to a 2 minute. Let's look at it on a 2 minute and see if that's more reasonable for your risk tolerance on a day trade, right? Let's take a look at that real quick. So here we go. So you could see on a 2-minute chart, I keep doing that. Is that me? Okay, right there. So on a 2-minute chart, you can see that, oh, even better. So you have the totality of the evidence here is that you have this 21 EMA. So price opens up basically above the 21 EMA. That's bullish. Then you got your price trigger at 127.39. So let's get over there, 127.39, thereabouts. Let's just call it right here. Ooh, full body on a 2-minute, lovely. So you would have probably got into it on this 2-minute candle right here, and then you would have been sad because you would have saw these two little tiny baby red candles. But hopefully, if you just said to yourself, well, you know what, my trigger was kind of like right over here, I could just go ahead and say, okay, I got in here, and now my trigger for my stop loss is the actual 127.39. Couldn't you say that to limit your risk? If you had additional risk that you wanted to take a little chance on, you can make it your 21. You can make it right below the body of this little candle right here. And you can see how then you can limit your risk by getting into a target. So now the first target of, what was that? The first target of 130 ends up being our target. So as you could see, we're climbing up, and 130 gets hit. Well, it actually gets hit here, here, comes down. It hits it, comes down. That would have made you unhappy. Comes back up, and then finally passes it. So what you could have done is you could have seen that the 130 was coming and just said, oh, you know what, at 129.90 I'm getting out. And that's what I do. And the reason is because when you have a target like that, you're often going to get this. And this basing right here takes the capital out of your premium of your call, your straight call. Now, if you got a credit spread or something different, it's going to be different. But for straight call, a short dated call, it's going to take the premium out. So what you can do is you can use that as a target, and you can say 130 is my target. I'm getting out at 129.90. So you're out before you even hit this line right here. And then you see the red candle go down. You're like, oh, I'm so glad. But then once you see this green candle, you're like, oh, wait a minute. This thing still has legs. Because I have some support and resistance lines up here, and you can see all of a sudden that next candle is green, and it's starting to go. So you could say, okay, well, I'm going to enter on this green candle right here, and I'm going to ride it to the next level. Okay, now this is where it gets difficult, because now you're looking at the target of 133.77. So let's go back. So now you've made the decision while you're trading that, hey, I'm gonna go for the second target. So what ends up happening is now you recognize that, okay, 130.77. Do we get to hit it? Oops. Let me just take a look at that real quick. 133.77. So that's $3. So now you're here. You've gone up here. Okay. And we go down and we go back up, and at the same spot here, it's going down again. And you would not have wanted to be here to here, would you? You would have not wanted to do that, because a lot of the profit that you made would have probably been, 50, 40% would have been gone. So what you can do is start looking at the other indicators on your chart to decide, I may not be able to get to my second target. So when you see two candles that all of a sudden start basing, that's when you know that there's going to be a change in something happening. When you see one candle and it's going up, and then the other candle matches it right there, then you know there's going to be a trend change. Comes back up, trend change. Now look what it does here. Candle, candle matches, trend change. And you can see how it just keeps doing this, right? Until finally it does it here. And we're going to continue up. Now, if you were watching, if you have like a mood indicator or the internals, if you're watching the internals, we have a really cool indicator to do that. You can then see how powerful the internals are. Or you're watching your ticks to see how many people are buying and selling. You're watching your RSI. There's all these other little indicators that can allow you to basically make a quick decision. While it's coming up here, all of a sudden, you can identify that there's going to be selling here based on whatever this label is saying. And you could actually just use that within itself. RSI, as soon as RSI starts to change from patterning up to start losing a couple points on RSI, you could exit there. But I guess the point being is that as you utilize these types of watch lists, even though the second target is at 133.77, doesn't mean that once you hit your first target that you didn't make any more money off this play. And so, you could have made another $1 approximately and 40 cents by just, could have got out here, got in here, 130, you go in, you make another $1.50, you exit here, you wait, you're waiting for the entry again. Could it be your support line? Absolutely. Could it be your 21 EMA? Could it be the RSI? Whichever one you like, right? You have to choose the indicator that you feel most confident with. And so then, we have the wave indicator, which helps us quite a bit. And so, once price starts to go below that zero, that's kind of your out. And if you're a trend trader and you're waiting, it's an uptrend, you just made money on your first target, and you know that there's going to be a pullback after your first target, you could wait for that pullback and then enter. And look where it's entering, right here. It's perfect, and it gives you confidence knowing that it's passing the EMA, it's passing your support and resistance, whatever that might be, and then all of a sudden, you could take this with confidence going to where? The next level. And that would be here. You would be exiting here. But you'd still be profiting from here to here. And so that's how we utilize the strategy along with a watch list. So I only went through like one ticker. But you could see how, depending on how much confidence you have in looking at your indicators, what kind of day it is. We were completely trending up. We didn't even have a mid-morning reversal. So this was really just kind of a slow grind up. And so these types of days, based on your training and trading experience, will allow you to make those types of decisions, whether you want to exit at the first target or you want to stay in the first target and wait for this pullback right here. A lot of people don't like this pullback. And the bad thing is if you get chopped up on this pullback and you get out and you didn't make any money on that first target, you're going to have a bad taste in your mouth, right? Which is not going to allow you, right, to get back in, to enjoy this movement and get out. And to get back in and maybe enjoy that little movement, which probably would not have been worth it because you need a pretty decent move. But maybe, it could help you identify when we're going to have a reversal, and then you could take advantage of the opposite move going down. And so now all of a sudden, the watch list becomes irrelevant because, hopefully you're being focused on your trades and you're just taking premier advantage of a couple of them. When you have a watch list that has 5 tickers, please don't be so, a random that you're not like really focused on a couple good ones, because all you need is a couple good trades. I often say to people, you only need one good trade a day or even just a couple a week, and you're making several $100s of income. It's when we overtrade, we get overly confident, we increase our size, then all of a sudden, it all goes to poop. in a handbag. So I hope these tidbits helped. I hope by looking at a watch list, you recognize that the way that I'm trying to teach this is that what's really nice, you wake up late, or maybe you don't. I used to do hours and hours and hours of research at night after the market closed, and then early in the morning. And I gotta tell you, sometimes I was so frazzled by the time the market opened. I'm like, now wait a minute, where's my list of 10? Where's my list of 10? Then the first three are like they're lagging, and I'm not moving along. And oh, please don't do this. Find a couple names as soon as they start moving, jump on them, use them. If nothing else, it's a focus list for you, so you don't have to do all of that research. It's not machine driven. These are traders that are trading and looking at charts. They did the homework. So and that was lovely today to be able to, trade live or to do education one-on-one on Zoom or whatever, and then come back and go, gosh, I really do feel like trading. I wonder if I have enough time. Let me take a look at the list. And it wasn't even in the morning. It was, kind of around lunchtime actually. And I usually don't trade during lunch. And then all of a sudden I started looking at just a couple tickers. I got into, it was actually on this list, I got into Square and RBLX, and both of them at the same time, very profitable and fast. So just remember that, and I guess the other example that I had that I thought was really noteworthy was, even though I have analysts that are piping in some channels, of intraday trade analysis, right? They're looking at stuff. Sometimes we're not looking at the same charts. I was in these trades. I easily saw on a 5-minute chart that we were going to do a retracement. I called it out to the group on my own channel. And 30 minutes later, they're piping in that we might have a retracement. Well, the retracement was done. And it was probably because they were looking at a longer term time frame. Not that they were bad analysts. They were just looking at a longer term time frame and thought, ooh, the first pullback has happened. And so typically speaking, when we go up all day and the first pullback happens, and then we rise a little, then we're going to do another pullback. And that second and third pullback never occurred. We only did that one retracement that I called on a shorter period of time, caught that 30% on the QQQ, and then we rose and kept rising again. And by the way, a watch list trigger, if you have a watch list, please don't think that that's just for the morning hours. The watch list triggers actually, because they're based on chart analysis, support and resistance levels. A lot of things go into that, pre-market levels, etc. And so depending on the analysis, those triggers are pretty good all day. So I guess what I'm saying is that if it breaks 127 and you get to target 1.5, so to speak, during your own trading, because now you understand the psychology of utilizing a watch list, and then all of a sudden it breaks 127 on the flip side, can you go for it? And let's say this is 2 hours later, can you go for it? Absolutely. You could go for it. That's a trigger. It's an important trigger. Here's a couple of them that didn't have any negatives, but yesterday they didn't have any downside targets, but I could see that it broke their upside analysis. And when it broke the upside analysis going down, I have enough confidence in my own TA that I took a look at the chart and started to immediately identify, and it's not hard, by the way, to identify a couple downside targets. And you can take that as profit. So it was funny because I was talking to the guys that helped me in my group, and I was like, it's easy for me to put winners and then which ones they actually hit. But to be quite honest with you, it could be a lot more winners. And so when you're having a strong trending day, and I say this all the time, when you're having a strong trending day, this is the day you want to put your capital to work. It's the days that we're chopping around and the SPY is up and down 40 cents and you're just sitting there. That's not good. So you always want to make sure that you have some levels on the chart for your support and resistance, maybe like on a 15 minute, something a little longer term, so at least the market moved $1 or $2, right? And as soon as it breaks one of those levels, now you know you're having some movement. You're having some velocity there. That's what you need for you to make money with calls and puts. So I certainly hope that this gave you a different perspective of how to use a watch list and how you can use it to maximize your probabilities to win more, because that's what it's about, is getting in and getting out with profit. That's our first rule in our group, how to get in and get out with profit. Then you can master the other skills that it takes to say, I'm going to ride this longer. I'm going to ride this profit longer. I know how to ride the profit longer. Or I can work on a longer time frame on a chart to be able to do that, right? So these are, different skills that you learn. But the first thing is if you don't know how to get in and get out with profit on a shorter term level as a newer trader, you never make it to the other levels, because what ends up happening is you get really mad. You get really mad when you lose consecutively, right? Then you're like, oh, I blew up my account, or you revenge trade and then you blow up your account, and so on and so forth. You need to treat this like a business. And so if you have any questions, just get a hold of me. I'm live every trading day in our Discord answering questions, and we have a lot of tools like Tradietics and human people that are analyzing charts and data, have a lot of education, trading and training, so 5 hours a week. So come pay us a visit. Oh, we also have alerts, and we have we text out our alerts, by the way, which is awfully nice for those people that are working. And we do a ton of swing trades. So by the way, my career, really, I was always someone that was working full time. And so I often just traded with credit spreads and butterflies, and they were all monthly type of trades where I was just generating an income. So we do that quite a bit here. We have a lot of people that are working in our Discord that want to learn how to make a secondary income to enhance their lives. And so trading is hard work. There's a lot of pieces to the puzzle. We have an education Discord if you're interested in actually learning about it. We make it fun. And of course, it's trading made simple. Try to make it simple. All right, guys, have a great day. We'll see you in the next video.